There's becoming fewer and fewer market participants that think markets are stable and we're about to continue to run higher when it comes to asset prices. Most people think that if we're not in a recession right now, we're about to get into one. And right now, the British pound, right, the Bank of England, they now are joining the club. We just saw the single largest sell-off on the pound that we've seen since COVID, and the pound just hit an all-time low for 2022. All right, so what is happening? Let's pull out real quick and take a look at the pound. We know that if you guys have been paying attention, this is our pound index, by the way. This is the pound relative to all of the currencies, giving us the ability to know exactly what's happening on the pound and not like the euro pound or the pound JPY. We want to know what's happening on the pound. You guys can see that we were hovering at a high on the pound in the beginning of 2022. But subsequently, we have fell sharply. And the main reason for this initial sell-off was because of what we saw happening in Russia and Ukraine. You guys can see that right there, February week 3, that was when the invasion happened, and we saw a sharp sell here on the pound. The reason we also know this is because it correlates very well with what we saw here on the euro. You guys can see that again, February week 3 on the euro, we saw an enormous sell side move, and subsequently since then on the euro, we've been consolidating. This is a structure right here. This structure, this consolidated low, hovering down here at this low, this is a structure that we are keeping an eye on because we now could see a potential break to the upside if the war lessens, or we could see a continuation sell side if the war intensifies. But talking about the pound, they raised rates. And just like how the US raised rates, right? I mean, let's take a look. I forgot to mention that. We see a massive up move happening on the US dollar, right? We just raised rates the highest that we've seen in over a decade, 0.5%. That's really, really huge. We sold off yesterday quite dramatically, and we've retraced that entire price move at this point. So the current state of markets, people are quite confused. What we see happening here to the US dollar when it comes to raising rates, and just generally this massive day-by-day up move, which we played very profitably, thankfully, we see that many traders are going to the dollar for that safe haven effect. And more than anything, they believe that the dollar is going to be more stable throughout this entire process of different economies, emerging markets, the Japanese yen hitting an all-time low in the past 26 years, right? The British pound, again, very worrying about raising rates. They could only raise rates 0.1 decimal points, right? Europe being right next to a potential massive war. There isn't many places that people can just go store capital. So we see a lot of money heading over here into the US dollar. Fundamentals are really playing out extremely well right now, okay? Let's take a look at the Australian dollar because there's been a pretty substantial sell side move here as well. I mentioned just a second ago, by the way, that the British pound was the third weakest currency in 2022. Well, that number 1 spot is being held by the Japanese yen, and the number 2 spot is being held by the euro. You then have the pound, okay? So the Australian dollar actually was doing quite well this year. You see a massive push to the upside, only for us to now be consolidating inside of that range. This isn't a currency that we're like really paying attention to right now, just based off of that consolidation, but eventually there are going to be some pretty nice moves. The Canadian dollar has been a very, very interesting play, right? We know that oil prices have been pouring cash into Canada. Canada has reaped massive benefits for oil prices being higher, right? And you guys can see here, right around the time we had that uptick in oil, early March, late February, what do we get? Massive run, okay? It's amazing that these things are as correlated as they are, okay? But what's the currency pair that we should be trading? Well, remember how we trade, at least here on this channel, okay? We use economic divergence. We want to trade a currency that's getting weaker with the currency that's getting stronger. And right now, when it comes to the pound, with recession worries and things of that sort, can you ask yourself, hey, look, all right, in the next, let's just say 2 months, is the pound going to be lower? All right, yay or nay? What's your generalized directional bias? Okay, and if we pull in here on the monthly, what that will look like is seeing the pound trade back down to a range, the lower range here on the monthly, which is around a 2020 range. And what that looks like is the pound heading back down to this 2020 low that we saw it formed, which was really around the low of Brexit. The pound has not been able to get out of this Brexit range since 2016. Quite interesting. Let's look at the GBPUSD. You're going to see a fairly parabolic price move sell side. All right, and then it's going to make more sense to you that, wow, okay, we're really nearing some all-time low action here on the pound. Because if we pull out, you really don't see price action down here at these lows almost in the history of the pound, okay? So this is a very, very telling sign with the US dollar getting stronger, the pound getting so considerably weak. right next to what's happening over in Ukraine and Russia, we could easily see the pound trade back down to the 120s, and that's about 3,000 pips away. So there's still a tremendous amount of opportunity to continue to start shorting this pound sell side, but obviously you want to be careful, and the strategy that you'll more or less want to trade with this bad boy is something more on the line of a breakout strategy. As markets consolidate, you keep just taking those breakouts, moving those stops, things of that sort. So I've been trading breakout strategies since probably 2015, but we've also adopted a really well-rounded mean reversion strategy where we like to see markets run, and then pull back. But that's not what you would use in this instance, because I don't know when a pullback's going to happen, and as things are continuing to intensify, it's more or less likely that we're going to continue to see breakouts. And you can trade those breakouts on a 4-hour and even on an hourly time frame. For sure. If you guys don't have a core strategy that you're implementing, check out Top Trader University. The link for that is in the bio. It details exactly how you could capitalize on instances that we see happening just like this. All right, so let's take a look real quick at the EURGBP. This is an interesting one as well, because obviously you're getting that GBP weakness and that Euro consolidation. This is a great example of, hey, if we get a little bit of exhaustion on this pound and we start to see a little bit of pullback, meanwhile we get a break on the euro to get maybe a euro push to the upside, you could definitely see this GBP, this EURGBP trade back down to the 8,400 level. Right now we're at the 85s. Maybe we get some consolidation up here at the high, only to retrace and then maybe rebound, right? If our long-term vision for this pound is that it's going to sell off, then maybe there is a quick opportunity to catch some sell side here on the EURGBP. Potentially, it has to set up. There are no trades on, and it's just a hypothesis at the moment. I know a lot of traders can sometimes get really caught up with what I say, like, hey, this is what he said. No, we're just monitoring this at the moment, okay? Also, NZD. Look at this massive NZD sell side move we've seen happen over the past few days. This is quite interesting. This is another example of, hey, are we going to continue to see this sell-off? Do we have the propensity to continue to go sell side? Euro NZD was a trade that we loved because of all of the economic divergence we saw. Euro was getting weak, New Zealand dollar was getting strong, so we sold massively, but subsequently since then, we've traded back up into the range. And now the question is, can we continue can we continue to get past this massive level here in terms of a resistance point? This is a weekly, and markets now are facing this price level. If we look at the fib on this bad boy, we're also sitting right at a 38.2. So sure, could markets maybe run to that 50? They can, but that's not the sizable move that you wanted to see, right? You would have probably wanted to have been playing down here in this the 159s, the 160 levels, and trade that back up into the 150. So you might have to wait a little bit, unless you're, again, day trading this thing and looking for some just quick action. If you're looking for that long move, these long extended moves, which is what we pride ourselves on, we just did 1,000 pips on the AUD CAD, NZD CAD. We like to take those long stretches. Okay, if that's your methodology, then you'll want to wait for a second, and maybe you'll see a 300 pip sell-off back down into the range here before we get that acceleration. All right, but by and large, the economics are not looking so good. They're just not. And recession fears are basically everywhere. And I'm actually going to be making a video later on this week talking about how I'm going to be managing my money and my daily routine if the recession comes about, because this is something that I've been planning on, or really preparing for over 2 years. I've been preparing for a recession financially, physically, where I'm going to go and spend my time, because you don't know if it's going to be like World War III, where you got fighter jets flying over, right? I mean, I'm maybe not that well prepared, but I'm not far from it. I'm fairly paranoid about markets right now and the impact on the economy and how they're gonna and how that's gonna affect our day-to-day lives. Okay, so that's a video I'm excited about making. If you guys are excited to maybe kind of hear me discern exactly how I'm gonna be doing that, make sure you guys stick around, subscribe to the channel as well. I'll make sure I crank out on that one before the week is out. All right, so what are your guys' thoughts? What is gonna happen during this recession? How bad is it going to be? Are we talking people losing their homes? Really, the people that are going to lose their houses are the ones that are overdoing it anyway, right? That don't have a real regard of their finances, right? You rarely saw anybody lose a house that was living beyond their means, okay? So the people who are living paycheck to paycheck, those are going to be the ones screwed initially in the recession, right? So we have to try to rationalize how large of a swath of people that is, and if that's going to be where it stops, or if it's going to go into, in terms of the recession, is it going to get as deep as people who are what financially well off, or at least financially well positioned to manage their money during times where the market is down, are those people going to even be affected? It's really hard to say where the recession is going to impact people the most. So I'm just hedging all my bets and assuming that I'm the prime candidate, right? And I'm just saying, okay, to not be that guy, how can I position myself, all right? And I hope you guys are doing the same thing and not just sitting back and watching this and looking at the news like, oh, wow, we're in a recession. Take it serious, okay? This is a finance channel for a reason, all right? So guys, I hope you trade safe. Be careful out there. I'm going to be coming back later this week with some more content. Let's do it, all right? Peace out.